just we'll go on. Okay, well, good morning, everybody. Thanks for being here today. I appreciate everybody. It looks like they've already got their mics on mute pretty well. So
they've done this before.
I think they've done this before, so I don't have to ask for that. But just remind everybody to, if you would, keep your microphones on mute, and we will. And I would ask you, if you have questions, to post them in the chat feature, and we will answer them at the end. If there's something that's hot and burning, I'll keep monitoring it while Carrie is presenting, and then maybe jump in and ask her. But otherwise, she has a Q&A set up for the end, so we can hold all those questions if possible. Again, good morning. My name is Scott Gardner from the Wyoming County Chamber. We're very pleased to have with us this morning Carrie West from West Bookkeeping Services in Perry, serving Wyoming County and beyond. She has clients probably all over Western New York, I would imagine. And I'm not sure further than that, Carrie, but at least
not yet.
Not yet, but you'll take them if you get them, right?
Absolutely.
All right. And she is going to present to us today tax updates, things we need to be aware of, thinking about, and planning for as we do the 2020 tax season, and what we think about probably going forward into 2021 now that we're here. So with that, Carrie, I'll let you do any introduction that you want to do, and I will turn it over to you.
All right. Well, thank you very much, Scott. Want to welcome everyone here. Thank you for taking your time. So a little bit about myself. I started my business in 2005 out of my home in one room. And then gradually we've grown and gotten bigger. We're actually restructuring the business this year, which I'm super excited for. I'm going to focus more on doing a lot more of this stuff and doing more classes and educating and training and consulting with businesses, which is what I absolutely love to do. That's my passion, is to help other people gain more knowledge and be more successful with however they want to be more successful for their business. So super excited for that. Today, what I would like to go over is just some basic general information on taxes and a lot of the COVID programs that have come through last year and part of this year also. So at the end, there will be a question and answer. So if you have anything, you can hold off, put it in the chat. Scott can let me know if it's pressing for that topic, or we can just answer it at the end. So why don't we, we'll go forward. So the first thing is going to be more of general information. Let me see. Okay, so topics covered for today, we're going to go over general information, which is going to be dependent income, Paid Family Leave Act, minimum wage, and then we're going to go over taxable income and how you can calculate that. I'll give you a really simple example so you can understand how to do that, and then we'll go over the COVID programs. So dependent taxable income, for a lot of people that have children, they usually ask me, you know, how much do the children have to make before they have to file taxes, and can I still claim them as a dependent? Do they have to wait till I file my taxes before they can file theirs? So for IRS, the dependent can earn up to $12,400 before it is taxed. For New York State, the dependent can earn up to $3,100 before it is subject to New York State income tax. You no longer need to wait to have your dependent file their taxes. So they can file it in February, March, and you can file it in April if you wanted to. The Paid Family Leave Act, we've had this for the last couple of years. Last year in 2020, it was 10 weeks of leave, and the benefit was 60% of employees' average weekly wage. This year, it still stays at 10 weeks of leave, but the employees' average weekly wages go up to 67%. And this is mostly with covering new parents, if you have a child, if you're a caregiver for a family, or military families with active duty deployment. Minimum wage, as we all know, has increased as of the end of last year. So minimum wage has gone up to $12.50. Fast food workers have gone up to $14.50. And tipped food service workers, as far as like if you work in a restaurant and your tip, has gone up to $8.35. I'm not quite sure. Moving forward, there has been talk about it bumping up to $15 an hour. There's nothing finalized or anything that has been said what those stages will be. So we'll all have to be patient and just kind of wait to see what we find out for this year moving forward on the increase in minimum wage to $15 an hour for the future. All right, calculating individual taxable income. Just a couple of definitions so that you can be more familiar with some of the initials. So GI is gross income. AGI is adjusted gross income. And QBID or QBID is qualified business income deduction. So if you have a business, you can be allowed up to 20% of a deduction based on your income that you can take off on your taxes. And those are for most owners that are sole proprietors. Partnerships, S corps could be eligible for the QBID. You might also know that as being called a Section 199A. Okay, so gross income can include W-2 wages, investment, 1099 interest and dividends from stocks, bonds, or mutual funds, business income for Schedule Cs, which is sole proprietor, single member LLC. You have your Schedule Es, which is rental properties and pass-through income from S corps and partnerships. And then you have your Schedule Fs, which is for farms. It also would include your 1099-Rs, which is from your retirement, 401ks, IRAs, and then your Social Security. So the deductions before the adjusted gross income, if you're a teacher, you can add $250 would be the maximum that you can use for that deduction. You can include health insurance premiums. You can do HSAs, which are health savings account. If you're self-employed, you can deduct 50% of that tax. If you have a deduction for a IRA or simple deduction, you can do that also. For this year, they have started a charitable contribution of up to $300 max. So you can put that on the deductions before the AGI to reduce your income. Another question that a lot of people ask me is, should I do standard deduction or should I do itemized deduction? Well, I have found out that most people are not able to do the itemized deduction because they don't have enough items to deduct. So their standard deduction is much higher. So for filing status, and you can kind of go over this as a little bit later if you wanted to, but filing status for single, if you're under 65 years of age, the standard deduction is $12,400. If you're 65 or over for any filing status, they give you a little bit more. So the standard deduction for single would be $14,050. And then you can just kind of go down with head of household, married filing jointly. We have some people that do married filing separately. And then we also have qualified widow. Okay, so for the example, for your gross income, if you have, say you have a W-2 wages for multiple people and it adds up to $75,000, and then you have investments of $32,500, your total gross income would be $107,500. Now we have the income adjustments that we just discussed. So let's say you're an educator and you teach for the school, so you're able to deduct $250. You take a maximum charitable contribution of $300. And then you have health insurance premium of $425. And then you have contributed into your health savings account $1,130. So if you add up all four of those figures, it comes to a total of $2,105. You deduct that amount from the total gross income, which was $107,500. So now your total adjusted gross income, your AGI, is $105,395. So let's say you're married filing jointly and you're under 65. So your standard deduction would be $24,800. That would equal your taxable income of $80,595. Let's say you own a business also, so you're able to get the 20% of the deduction. This is where you would put that 20% deduction. So say for 2020, your total amount came to $4,200. So based on that amount, you would deduct that from the taxable income. So now your new taxable income would be $96,395. So hopefully I didn't go too fast over that with you guys, and that's a little bit easier to understand. If you do have questions, feel free to reach out at the end and I can explain that a little bit more. So a couple other things that a lot of people ask me is, what can you deduct and what can you not deduct? So fully deductible are accounting, professional, and legal fees, which includes your permits and your license. You have your advertising, you have your marketing, you have your promotions, you have your bank charges, your interest expenses, your credit and collection fees. You also have commissions and sales expenses, consultation expenses. You have any type of continued education, seminars, trainings, professional development that you have. You can also deduct that. Office supplies and expenses, which can include like paper, pens. If you have software subscriptions, websites, hosting, any of that stuff you can include. Equipment rentals. You have repairs and maintenance, and that could be a couple different things. If you have a, if you have a construction business or a farm or anything like that that deals with equipment, you can put that under repairs and maintenance that way, or you might have another set of repairs and maintenance on like a building. So if you had to fix a wall or lighting or electric, that could also be put under electric for repairs and maintenance. You have your contract labor costs, which could be like when you sub out the subcontractors. If you have employee benefit programs like health or dental, profit sharing plans, those all can be deductible. Insurances, if you have rent expense, you have your salaries and wages. And for the salaries and wages, you can deduct 100% of your employer taxes for the wages. You have small tools and equipment, you have utilities, you have security expenses. Those are the ones that you can fully deduct. Partially deductible is customer gifts, client gifts. The rule is up to $25 per person for a customer or client gift. Meals up to 50%. So if you go out and you're talking business, you can deduct up to 50% of that. They did go into effect as of 2019 that they did disallow entertainment deductions, which were also 50, but they're no longer doing that. You have mileage and auto transportations. So per mile that you drive, in 2020 it was 58 cents. In 2021 it's going to be 57 cents. And a lot of people ask me also as far as what miles they can deduct. So as a business, if you go from home to your office, you're technically not supposed to deduct that amount. But if you go from your business to clients, to the post office, to a store to get supplies, you can deduct that amount. And then when you go back to the office, home, you really can't deduct that amount either. You have home office expense, which how that's based is the square footage of your house compared to the square footage of your office space. And then whatever the percentage is from that, you can deduct like your utilities, your taxes, your insurance, your interest. If you do have a mortgage on the house, you can deduct your interest. If you have repairs and maintenance, You can deduct a portion of that. There's a lot more that you can deduct if you do have a home office. Or they just came up with a simplified version, which would be $5 per square foot. So say, for example, you have a 1,000 square foot home and your home office is 100 square foot, you would be allowed $500 deduction using the simplified method of $5 per square foot. So some unallowed business deductions, which some of these are kind of funny, I think. One would be illegal activities. You can't do those for business deductions. You have fines and penalties you cannot do, political contributions, capital expenses, hobby losses, club dues. This was a little bit of a debate as far as club dues, as far as if you subscribe and have dues for golfing membership or something like that, can you deduct that? So you used to be able to, now you're not able to do that. Commuting, like I just discussed, is unallowed. Business gifts over $25. This is another thing also for clothing that a lot of people ask me, like if they go out and they buy overalls just to keep warm during, outside weather, can they deduct that? Technically, you're not supposed to, because you can use that for personal use also. A good general rule of thumb is clothing that you can deduct is if you have like a logo right here of your company, uniforms, stuff like that, you can deduct that as 100% deductible. Most home office spaces you can deduct as long as it is solely for the purpose of a business space. So say, for example, you have in your bedroom, you have a little area that you have a desk in. Technically, you shouldn't deduct that because it's not solely your business space. It's actually your bedroom. And then you have entertainment expenses. So the additional credits and taxes that are allowed on your tax return are child and dependent care taxes or credits. You have your education credit, dependent credit, which the dependent credit is any child under 17 goes for the child tax credit. Any child over 17 is under the dependent credit. So you have 500. And usually what I like to do is if I know people are having children and they're like in their 13, 14, 15-year-old, I usually like to tell the parents, just a reminder, in a couple of years, you're going to be losing the child tax credit, because a $2,000 is a significant amount to lose, going from $2,000 down to $500, which could totally change how your taxes look, what your refund could be, or maybe even what you owe an additional amount. You also have, for credits, earned income credit. You have your early retirement penalty tax. You have your self-employment taxes, and then you have your stimulus payments, which is the economic impact payments, which are also credits. And I'll go into a little bit more with the stimulus payments on the next couple slides, because we've had a lot of questions on, do I have to pay it back? If I didn't receive the whole amount, how do I get that amount? So we'll go over that in a little bit. Okay, so the next one is COVID-19. We've all experienced a lot of drastic changes last year in business and personal. So for the CARES Act in 2020, they waived the required minimum distribution. So if you're over a certain age and you are claiming, if you have retirement, you actually have to take a minimum distribution every year. They have waived that in 2020. If you have a qualified plan or an IRA, you are able to take out $100,000 in your plans with no penalty on the tax, as long as you can prove that you needed that to offset income and pay for expenses, and you had a reduce of your wages for the year. How the $100,000 is going to be repaid, you have a couple different ways. You can use that as income, or you can redo a payment for that. And you can do that within 3 years. So let's say, for example, you did take out the $100,000 in 2020, and you say, okay, I definitely want to pay that back and put it in. So the first year, say you put back in 50,000. The second year you put back in 20,000. So now you're at 70,000. The third year you're like, well, I'm not quite sure if I really want to put in the additional 30,000. So you decide to take that as income. So in year 3, that would be put on your tax return as extra income of $30,000. And you can do that a lot of different ways with claiming it as income or repayment. And you can probably talk to whoever's helped you out with your taxes to see what would be the best benefit for you. The economic stimulus payments, you do not need to repay that back. I know that was a huge talk last year and at the end of the year and part of this year. Do I have to pay it back? No, you don't. If you did not receive the total amount in 2020, and that includes the first stimulus payment and then the second stimulus payment that we just received, both of those are going to be based on the 2020 tax return amounts. So say, for example, you had a child in 2020, and for the first stimulus payment, you were able to get $600 and you didn't get that. You could put that on your taxes as a credit. For the last round of stimulus payments came out, if you missed, say you had the same child, you missed that $500, you can also put that on the 2020 tax return as a credit. And what the credits will do is that will reduce your taxable amount that you owe, or it can increase your refund, just depending on what your income and taxes that were taken out. Another program that if you were a business where was the PPP loans. They just came out with round 2 of that. A lot of the banks opened that up either last week or this week. So for round 1, there is a 1-page forgiveness applications that you do need to go back to your bank and fill out for loans up to $150,000. If it's over $151,000, there's a more in-depth application. So if you haven't done the forgiveness application, I definitely urge you to contact your bank and see, because if that application is not filled out, you will more than likely have to pay back the loan. So definitely contact your bank. Round 2 PPP loans is there's funding available through March 31st of this year, but the catch is you have to show a 25% loss in one comparable quarter for your 2019 and 2020. So say, for example, for 2019, your revenue was $100,000. Say for 2020, in the first quarter, your revenue was $125,000. You don't qualify for that because you actually increased your revenue. So let's just kind of turn that around a little bit more and say for 2019, you were still at 100,000. For 2020, your revenue was $70,000. So you are able to take that because your revenue was 25% or less in 2020. And again, you can contact your bank a little bit more for the details on that. Some other companies had the EIDL, which is the Economic Impact Disaster Loan. That did expire in December of 2020. And when you signed the contract, it was a 1-year deferred payments. What I have noticed this past year when people started paying back the loan, they're like, why is my principal not going down? So I went back through their contracts and I looked at it. And as soon as you sign your contract, say you sign your contract on June 1st, as of that date, it starts accruing interest. You do not have to pay it back because it's been deferred for a year, but the interest keeps occurring. And when you start to make your payments a year later, that amount of payments will be applied first to the interest. So a lot of people don't realize that. So don't be alarmed if you start paying off your idle loan and you're not seeing the balance go down because it's applied towards the interest first. All right, so the most recent credit that we have is the employee retention credit. This can be taken on your quarterly payroll report, but it can only be taken for 1 quarter, and that's it. And if you have the PP loan, you can do both together. So in 2020, if you have a decrease in revenue for 50% in comparable quarters for 2019 and 2020, then you're qualified for a 50% credit on the employee's wages. Now, for that period for 2019 and 2020 calculation, it's capped at $500 or $5,000 per employee. And you will need to file an amended tax return for the 941 in 2020. So they also have it for 2021. How that works is you have to have a 20% decrease in revenue for a comparable first or second quarter based on 2020 and 2021 figures. They've bumped up the credit to 70% this year. So if you can have up to a total of $7,000 as employee wages for a credit. So let me kind of explain that a little bit so it makes a little bit more sense. So say you do qualify and you had a 20% decrease in Q1 of 2020 compared to 2021. Your employee gross for that quarter, if it's $10,000 or above, you would get the $7,000 credit per employee. If your employee gross $5,000 for that quarter, you would get a $3,500 credit because your gross wages of $5,000 divided that by 70 would equal the 35. So you can kind of figure out what the calculation is on the gross wages. And hopefully that makes sense. I know it can be confusing, but hopefully that it's a little easier to explain with the example. And other than that, I think if there's any other questions or anything like that, I don't know, I see that.
You do have one, Carrie,
Yep.
so far. Sharon asks, is the PPPL 20% by quarter so you can apply if there's one lower quarter, which I would say yes, it's quarter by quarter, quarter to quarter comparable, and it's 25% loss, but maybe you can explain that a little bit more.
So how the comparable quarters go is you can only take 1 quarter for the, let me actually go back to the slides so you can kind of see that. So for round 2, is that what Sharon's talking about? I would probably assume for the 25%.
I'm thinking so, because that's where that issue comes up.
Okay. So how that works is if you have for the first quarter of 2019, which is January, February, March, you compare those amounts to the first quarter of 2020, which is January, February, March. And you can compare, so the 2 comparable quarters would be for 1 quarter per year. So you have to have the same quarter per year to compare. Hopefully that answered the question.
Yeah, so it's I think so, because it's a 1-to-1. You have to compare like quarters from 19 to 20.
Right. So for example, if you have revenue in 19 that you compare for first quarter, you cannot compare that to second, third, or fourth quarter in 2020. It has to be the same quarters for 2019 and 2020.
Yep, and she says yes, thank you. So that's
okay. Absolutely.
good. Let's see if there's any. Are there any other questions? People can also. There's a way to raise your hand if you know how to do it, or you can type that you have a question in the chat box, and we'll answer it here. Doesn't seem like there's lots of questions, so this could be good.
It could be. Hopefully I explained myself simple enough so that everyone understood.
And perhaps maybe, I guess I would encourage maybe a question that you were wondering but didn't see in the presentation as well, right? You may have an answer to that as well, but
Yeah.
it wasn't part of what you prepared today, but you
Yeah.
take a stab at it if somebody asks this.
Yeah, and if I don't know, I'll find the answer and get back to you.
Right. So we'll wait a minute, and if anybody's got anything like that, we can ask that for sure. Do you have any thought on a recommendation? Say someone took an EIDL loan, and the interest has started accruing the date it was signed. So say July 1
Mhm.
last year. Is there any benefit to making interest-only payments? Only in so much as maybe it just reduces what you're going to pay, on the other end. But is there any school of thought about just making interest-only payments until during that deferral period?
That's kind of the default process. So if you pay it during the deferred, period of a year, all of that payment will go to the interest. So if you pay it within the year, or even when you start to pay it in the beginning
Right.
of your, after the year, if you pay it, all of that goes towards the interest, because they want to get all their interest back first.
Right.
And then when you get caught up on the interest amount, then it's going to go towards the principal.
Okay. There's another question. I know the answer to this question, but
Okay.
it says the forgiveness forms are available at the banks. Question. So we apply for that through the bank the loan was through.
Yes. Depending on what bank you go through, they should have already sent an email.
Mm-hmm.
I just reached out to a couple banks because with my clients, I have not received any emails forwarded to me to help them fill out that application. So I contacted the bank and I said, okay, I know it's there. No one has reached out to me. Can you please give me a link or give me an idea of where I need to go on the website to find the application so I can help the clients out, because I don't want them to pay back this. I want it to be forgiven.
Right. Have you noticed, Carrie, that several of the banks have created an online portal that they're really, if it is the 150,000 or less, they are doing a almost totally online process, and you just fill it all out that way. And some of them also, for the second round, it's all an online application as well. I've noticed they've
Yes.
kind of
Yep.
taken the time to figure it out. Last time when it was, it happened so quickly, they didn't have time to get that up and running. But now they've created both a forgiveness and a new round 2 portal. So depending on the bank, but I think most of them that I've talked to that we have, at least within Wyoming County, have gone that route.
Yeah, most of the banks, if you're applying for the second round, they have everything right online that you can answer the questions, you can e-sign, and then you can upload the documents right there.
Mm-hmm.
So if you're computer savvy, you can definitely do that. I know there's some clients that I have that don't go that way, so they'll probably be doing the paper and dropping it off to the bank.
Right.
So
Yeah,
the online option is available.
They've tried to streamline it, I think, as much as possible. And each bank, if people are interested in the second round PPP, you'll also notice that the banks have set up some more rules too, as far as you have to be an existing customer, or you could be a new customer that opens an account. They aren't just letting anybody, what I've noticed is they aren't just letting anybody from anywhere just come in and ask for the loan. So they really prefer what sounds like a banking relationship with you of some sort. So.
Yep, and that's all going to depend, like you said, on the bank, as far as what the requirements are. If they're going to work only with their customers that they have, if you open up a new account, then you're a customer, or they might not at all. So it just depends on what bank you work with. Most people that I've helped with the PPP loans, they work with the bank that they're already working with. So you already have that relationship.
Yep.
So together. There are a couple though that have gone to other banks to get the loans
Indeed.
because funds have ran out through their local banks, so they've gone elsewhere. So
Right.
that option is available too.
Mm-hmm. Yep, we've seen cases of that. And, it was a fast and furious kind of crazy process for round one.
Yes.
And unfortunately, they were able to catch their breath and make some more defined decisions about how they would proceed. I think
Right.
if and when there was a round two.
Yeah. Round two is a lot smoother.
It seems to have rolled out more smoothly. Yes.
Yes,
Much
absolutely.
more, which is good.
Yeah.
Good thing.
Yeah. It's a lot less work on our end, which is great.
Yep. I imagine.
Yeah.
Let's see. Do we have any other questions? It seems like I don't see any in the chat. And I'll give everybody one more opportunity to either send a question, or at this point you could even pop on your screen if you wanted to, and we can handle it that way if you really want to. If you're not in your pajamas and you're at work, we'll do it.
And even if you are, it's okay. Most people have that option now anyways to, work from home and
Right. So, well, I don't think there is. So I guess I will say thank you. We will.
Thank you very much.
We will post. We'll send a link out. We recorded this, and God willing, it worked.
Right.
And I'll post it and then send a link out to everybody, so if they want to look at it. Carrie, could we also send your slide deck as a PDF if you?
Absolutely.
Just in case they wanted to refer to your notes,
yeah, absolutely.
Okay,
Yep.
Great. We'll do that. So we'll have that stuff sent out. So if anybody wants to follow up, and then if they have any other questions, they can either send them to us or they can probably send them to you, right? And then you can answer them. So you're available, which is nice. So we appreciate your taking the time this morning, and we appreciate everyone tuning in, and hopefully it was informative and get you into that mindset for how tax season is looking and going to look, and some things to think about for moving forward. So
right. Well, thanks for having me, and I hope everyone learned at least a little something. And
right. It's a good day if we all learn a little something.
It is every day. Yep.
There you go. Okay. Well, all right. With that, I will say thank you. And then I think what we'll do then is sign everybody out.